All right, welcome back to another topic day with Rick Sedberry from Movement Mortgage. I appreciate you jumping on with me again. And today I'm looking at my list of topics that we've set up to kind of go through, and want to talk about credit scores. It's been kind of a hot topic lately of up
Yes.
and down and who qualifies, and now the rates are low and now the rates are moving back up again and now they're blah.
Yeah.
So give me some insight so I can share this with all of our people here of where are we in this credit score world? Who qualifies? What does that mean if you're, do they people have 800s or do they have 400s? Like what does all this
Right.
mean?
Right. So credit scores can range anywhere from 400 up to 900, essentially. I can tell you in 22 years, I've never seen a 900. The highest I've ever seen is in the 860s. Obviously, the higher, the better. Um, each program that exists in the mortgage world kind of has their own credit score requirement, if you will, the minimum score that they'll allow. Which is important when you're taking these buyers out. You want to make sure which program they may qualify and which ones they may not. An added note, because of the COVID period that we've hopefully are starting to see the exit sign to,
Right?
um, is there are what's called lender overlays.
Okay.
And what that means is, while the program may allow a minimum score, the lender may have an overlay that may not allow it. So, for example, my company has programs with a credit score as low as a 580. That's kind of
Okay.
our threshold, nothing below
Bare
the
minimum.
580. Yes.
Right.
But during the peak of COVID, we actually had increased that to where we weren't allowing anything under a 640.
Okay.
And then as times have changed and we've started to see the exit of it, we've gone back down to where now we're back to where we were, which is the 580.
Sure. And I
Um,
think so. Let's pause there for a minute. I think
yes.
because I think this is a concept that we don't always think through, right? People, I got a client, they want to buy a house, they're going to a lender, and then we get frustrated that they don't meet this minimum requirement,
Yes.
right? Or in your case, the overlay that you bumped during COVID. But
Yes.
what we're failing to think about is I'm asking you to give me $200,000.
Right.
This is real money. Like this
Right.
isn't just, ooh, it's on paper. You're as the lender, right? Not Rick Sedberry personally, but
Right.
Movement Mortgage. I'm asking you to give me this chunk of cash to go pay off the
Right.
seller,
Exactly.
their mortgage, their whatever. So if I think about it in that way, like you should have some ability to say, look, this time of the year, this is really crazy. We can't take a risk like happened in 2007, 2008.
Oh yeah.
So now I'm going to raise this up to say, hey, my minimum requirements are a little higher because I'm throwing all this money out.
Right.
Does that
Yes.
make sense?
Absolutely. Yes.
Okay.
And also, and let me start off by saying credit scores can drive a person insane. And I am actually in the industry, and I will say that 100% truth. You can actually have a 19-year-old who's an authorized signer on his dad's credit card that can have a higher credit score than you or I, who we pay our bills. There's nothing wrong with us, but
Right.
it's the fault in the way credit scores are calculated.
Right.
Although we can go down to a 580, I always tell people 580 with an asterisk behind it, because in addition to having the score, it has to make sense from a credit worthiness. If you may have someone that has a 580, but if they're past due on several accounts, then the underwriter, who I always say has the power of the pen, an underwriter is not going to say, well, sure, I'll give them $200,000.
Sure.
At the end of the day, we have to use some common sense thinking. If they can't pay their current bills, there's a reason why they have a 580. Okay.
Right.
Now, that's not always the case. Sometimes you can say, hey, they look at their history. They may have had a small bump in the road, but they fixed it. or they're young and just don't have a lot of established credit yet. So there's nothing to really show a higher score. So that's why I always say 580 with an asterisk,
Right.
because it could be a 580 that's a slam dunk and we can move forward, or it could be a 580 that we probably won't be able to make it work. So
Sure.
while
So
score is important, it's not an all tell whether they get the loan or not.
right. It's not perfect. You might be a 620 and have all kinds of things that are
Yeah.
crazy and still not qualify.
Yes.
Okay. So let's talk about two things that came up in that. One, let's say I have a client who has a lower score.
Okay.
It's down near the 586, like under 620, 640 range, right? How can I be of best service to my client in working with you to have this three-way conversation, this three-way relationship between client, agent, and lender to help them build their credit?
And I think it depends on the buyer. Each situation is unique.
Okay.
And it is conversations that I have with my buyers as I pre-qualify them. Just because they quote unquote qualify and have that lower credit score, it may not be the best thing for them to buy a house right now. Sometimes with a few tweaks here and there, we can get them to where they're in a much better situation financially. I'm a firm believer of, I don't tell anybody no. I may say not right now, but we'll put them on the plan to where they can get themselves in a better situation.
Sure.
Now, sometimes we may just have to roll with the punches with what we got. You know, we can't remove things that are there. So sometimes we just have to address, you know, if they've had a bump in the road and move forward.
Sure.
But sometimes it can be a quick fix, if you will, that may shoot their credit up, you know, 30, 40 points, you know.
But that's a conversation they need to have with you, correct?
And it is a conversation that I have, you know.
Right.
When you talk to a buyer, you know, you say, hey, how do you think your credit's, you know, I always ask before I pull it, what do you think your credit's like?
Right.
Well, you know, I think I'm good. And that's let me start off by when we're talking about credit scores, let me throw out the monkey in the room, Credit Karma.
Sure.
It's not accurate.
What?
Yes. Shocking as that may be, none of the credit scoring avenues that clients look at, you know, credit wise and all their credit cards typically offer credit score systems. What people don't realize is that, like Credit Karma is the prime example. Credit Karma is using its own credit scoring system. It is not using the actual credit bureau scores.
Right.
So sometimes when they're showing, you know, a 620 through Credit Karma, they might be a 580 or lower when we actually pull it.
Sure.
Because Credit Karma is just not 100% accurate. I use Credit Karma as a gauge, especially if you have someone that just doesn't know what their credit's like. I mean,
Right.
we have young buyers that just don't know. So I'll say, hey, let's look at Credit Karma. We're not worried about the score so much. We would just want to see what's out there so we can
Sure.
come up with a better plan to help educate these buyers. Because, you know, buying a house is one of the largest purchases they're ever going to make.
Right.
And it's our job as both the lender and y'all's job as the agent to educate them to make sure they're going through the right plan.
Now, is it still true that once you can pull from Experian and all like the three major credit companies once a quarter that you can pull a credit report for yourself without dinging your credit?
Well,
So if I roll them through the year, if I did Experian and I did Equifax and I did right, then I could get from all three agencies because they all have different things on them.
Yes.
Right. And that's the other thing of credit scores of, well, this one tells me I'm this and this one tells me I'm this and who's right and what's going on. And my head explodes.
Right.
So is that still true that I could pull from them through the year?
When you actually pull it, yours is not a hard inquiry, so it doesn't affect your score regardless. You're
Right.
allowed one free report a year if you just want to kind of gauge making sure everything's reporting correctly. Now, if you want your scores, then you're actually paying for that.
Right.
I find Experian to be the closest as accurate if you're wanting a true gauge as to what your score is.
Sure.
It's really close to what it realistically is.
Okay.
Now, from our perspective, we use the middle of the three scores. When you talk about, hey, well, one says this, one says this, that's why we take that median, because it's the most consistent of where you should be approximately.
Sure.
Because certain accounts don't report to all three, they may only report to one, which is why you're going to see different scores.
Absolutely. Okay. So here's the other thing that came to my head as you were talking, right? You used that dirty word, underwriter.
Yes.
And nobody in the agent world knows what that is. They just know that they sit in a cave, it's dark, they have a candle, they have a felt pen, right? And they just say no, and they right. So can you give us a little bit of insight of that process and who that person is and what their job is, so we as agents can not hate them as vehemently as we do right now?
Yes. So an underwriter is actually the person that issues the approval on the loan. Now, in today's technology days, everything is automated for the most part. So we all start off with actually submitting a file through an automated underwriting system.
Okay.
So it's a computer. The computer will spit out essentially three different answers: yes, no, maybe. Is essentially
Okay.
The underwriter's job is to make sure what I put is correct, because you can put whatever you want to get the system to approve it. I can
Sure.
say the client makes $200,000 a year, and the system will go, well, sure, they can buy the house.
Absolutely.
And then the underwriter looks at the file and finds out they only make 50. Well, now the file's not as, strong. So, it's our job as the lender to make sure we're putting in accurate information. An underwriter, while we obviously have that, that black cloud over them, they don't want to turn down loans. They don't.
Right.
They want to make them work. So their job is to say, okay, well, this is what I got. Can I make it work, or do we need to restructure it? Underwriters, they try to make it work if at all possible. Sometimes they require more finessing than others.
Sure.
But I always joke around that the underwriter has that power of that pen to decide of whether it goes or not.
So it's fair to say that there are checks and balances for you.
Definitely, yes.
And the analogy that came to my head as you're talking about it is that's the pre-qualification versus pre-approved, right?
Yes.
Client says I make this, right? Well, based on what you're telling me, your credit score is 800 and you make $200,000 a year. Yeah, you'd be approved for $400,000.
Right.
Well, then I go to pre-approved, right? And now show me. Give me the bank statements, give me your checks, give me all that stuff. Well, in actuality, you only made X, so you're really only approved for this.
Exactly.
And there's another step before someone actually counts out the cash to give it away to say, let's verify again.
Yes.
This is what they make, this is what they owe. All the I's are dotted, T's are crossed.
Yes.
And then we can go forward.
And that's why it's very important, from your perspective as an agent, to make sure that these buyers have gotten all their documentation in to the lender before you go start showing them houses.
Okay.
Because unfortunately in this world, if you haven't heard the term, buyers are liars. And
what?
Yes, shockingly as that may be. But if I have the documentation already from the customer, then I can say, hey, they make what they say they make. You're good. You're golden. But if the customer tells me they make $100,000 a year, but I don't have anything yet from them, I don't want you as the agent to go show them 24 homes when they're not going to qualify for that price point they want. It's hard to take a buyer down a step. If they say, if they tell me they make a certain amount of money and I'm have you showing them $200,000 homes, and then we finally get the documentation and they have to go down to 150.
Right.
It's like bursting their bubble. It's hard. Well, no, I don't want the 150s. I want the 200s.
Right.
So, but at least if we've done our due diligence up front, we can avoid that letdown.
So is that a checklist that the mortgage person can give to us as the agent that we can check off? Or is it as simple as, if the mortgage person tells me I'm approved for this number, I can go?
I prefer that they take it a step further. So I have available to any agent that would like, it's actually a co-branded checklist of what the buyer needs to provide. So that way, when you're meeting with your potential buyers, you could say, hey, let's start getting this stuff all together now. When I actually talk to the customer initially and do the application, I'm actually sending the email of that checklist and the agent is copied on the email. So that way you know exactly what I still need. And then if I am still waiting on documentation, I'm replying to all to that initial email.
Right.
So that way you're seeing, hey, why haven't you brought Rick these last two pay stubs? You know, you're
Right.
holding things up.
Right.
Um, but it is something, you know, the lender and the realtor, we lock arms and do this together.
Right. And that takes discipline on our part because our client's excited. They want to go. They want to see the houses. We want to go because we want to show them houses because we want them to buy a house.
Yes.
But we have to do what's best for our client. And sometimes that's saying, hold on,
Right.
you got to make sure that not only are you going to be pre-approved for this number, but what number do you want to be at for your monthly bill?
Absolutely.
And say, look, you're approved for $300,000, but you said you don't want to pay more than $700 for your monthly note.
Right.
Well, that's not a $300,000 house.
Right.
We got to have that conversation with our lender to say, Rick, they want to stay around this number. What price point, blah, 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 should I be at? Right. So we can do the best for our clients.
Absolutely.
Love it. Okay. Anything else when we're talking about credit scores that you think is really important that they know right now?
Right now, the overlays is key. So keep that in mind. You know, you want to make sure that whatever lender they're going through, because there are still lenders out there that have those overlays and they may
Okay.
not be able to offer it. You might be thinking, oh, my customer said they have a 600. I know they're good. It's not always the case depending on which lender that they're going through.
Awesome. And if any of our agents want to reach out to you to ask more questions or talk to you about that co-branded checklist, give us your email real quick so they can reach out to you.
Rick.sedberry@movement.com. Of
Awesome.
course, they can always reach me on my cell phone, 985-969-8048.
All right, my brother. I appreciate you as always. All right, bud.